Joe with me, Jim, and I'm actually recording this on Wednesday afternoon because when you're watching this, I have a couple appointments down at the Harbor Club, which is a cool place to be. So, no morning Joe at the moment, just some water. I wanted to share. So you heard the news. The inflation rate came out. It's now up to 9.1%. And I thought this was very interesting. And I want to talk about housing prices during times of high inflation, right? I think it's very, very interesting. So I found this chart. In this chart, you may have heard that the way inflation was calculated back in the 70s and 80s changed. And I don't know exactly when it changed, but it did. So this chart's very interesting because it went back using today's methodology of calculating inflation. It went back and mapped it and graphed it all the way back to the 50s, right? So you can see 1950 inflation was kind of high, then went lower, et cetera. This is the point where we are now. And this is the point where we, interestingly, were back in December of 74. So we've hit the same point if you calculate inflation the same way, right? And then obviously through stagflation and all that we heard about in the 70s and lived through, now it's higher yet, right? So what's that mean? Well, let's look at what housing did during that whole period from basically 75 through 82. The whole, we went through a couple of recessions. Let's look at it here. Nope, that is not what I want. There. So these gray bars, gray perpendicular bars are when we were in recession, right? So you can see here's 75. That's when inflation really spiked. Here's 80 and 81 when it went even higher yet. Let's go look at it again. 80 and 81 when it went higher yet, right? Inflation really hit its high point right back there. So these are the periods when we were in recession and inflation was sky high. It was stagflation, right? The economy was kind of stagnant, but we kept seeing high inflation in spite of that. It wasn't a fun time. I was a kid. But look at this blue line. This is what housing did during all that time. Home prices, right? They kind of took off and kept taking off. And that makes sense because in a time of high inflation, what goes up? Well, prices, but also rents, right? And so if rents are going up and pushing up, people are like, I'm tired of renting and I'm going to buy a house. Well, that pushes the price of homes up, right? And so if that is the case, that we're going to see inflation for a little bit here, and I think it will, we should see home prices go up nicely. Not at the pace they were, hopefully, not for the last 2 years, but still going up nicely. And there's another chart, I didn't pull it up here, but home prices always go, mortgage rates rather, always go down during a recession. They have traditionally always. And I don't see any difference this time around. Now, the Federal Reserve is going to raise rates. Some are saying we thought 3/4 of a point on the 27th, July 27th. Some people are saying now with this hot inflation reading, it might be a point. It might be a full point. That short-term rates, that should, all things being equal, that should push mortgage rates down just a little bit. Not a lot, but a little bit. And that'll be a good time to be locking in. So if you're in the market for a home, let's get pre-approved, get ready. And if you find that right home about that time, about the end of this month, we'll be ready to lock. I hope that helps. It's interesting times for sure. And we'll see what the Fed does on the 27th, whether it's 3/4 point or a full point. Either way, especially if it's a full point, it should favor mortgage rates and they'll go down just a little bit. Hope it helps. I will be back in the office shortly and happy to help with a pre-approval if I can.